first week. Before I go into any charts, content, all this stuff, just want to say there's been a few people in the Discord that are saying like they're confused and stuff. I just want to tell, and like this goes for everybody. Not everybody spoke out, but this is new content to most of you. Okay, so you're not gonna hop on and understand it right away. It's just impossible. That goes with any sort of content that you're studying. Please take your time. Go through videos multiple times if needed. I feel like the most value you'll get is once you understand the core content. The case studies is just continuously putting everything together. Okay. And that I feel like you'll find the most value out of the case studies. And like I mentioned in the Discord today, the liquidity tracking videos, those are good for building a bias. Because as you guys know, we trade with liquidity. So if there is no liquidity in the market currently, like on your chart, then you're not going to be able to build a confident bias, right? So the liquidity tracking series is a good way of studying and training your eye to see liquidity on a consistent basis. So definitely go through those and probably go through those a couple times. And yeah, as moving forward, we'll have more continuous new case studies coming out, more content coming out. I'm always trying to make it as easy as possible for you guys. I've been able to refine it here and there the last like 6 months ish, to make it as easy as possible. And to be honest with you, once you liquidity tracking videos, yeah, those are good, and I like making those. Um, like I said, the most important thing in this market is being able to build yourself a bias, because entries at the end of the day, it's just essentially just like a pattern that happens over and over and over. So if you don't have the bias correct, the direction correct, it doesn't matter what the lower time frames are telling you for your entries. If your bias is not right, then it won't respect it, and it'll just blow the other way, and you'll be getting losses left and right. So at the end of the day, the correct direction is what pays the profits. So that's where you want to be focusing a lot, right? So yeah, the liquidity tracking videos for sure, they're fire, and those are good for building that bias, finding that direction. Um, but yeah, cool. So I just wanted to speak a little bit. I'll leave you guys a couple minutes at the very end of the webinar to if you guys have any questions. Some of you might have a lot, so don't bombard me with 100 today, or maybe I'll be able to answer some through the webinar. But yeah, like I said, we'll leave a couple minutes at the end of the webinar, and we'll go over some direct questions you got as well. Okay, so cool. Quickly before I start, can you guys just let me know what kind of pairs you guys trade? Hopefully you guys are sticking to like the majors. Um, those are the ones I recommend. I'm not saying the cross pairs like GJ, those pairs aren't good. I'm just saying I found the most consistency within the majors, meaning the USD cross pairs like gold, EU, GU, AU. Those are probably the best pairs to trade. So if you're still in that little zone where you're trying to find a pair that you want to stick to, I definitely recommend sticking to the US majors. Those are the most consistent. Alrighty. But yeah, if you guys let me know in the chat real quick, just let me know what pairs you trade. If you trade EU, if you trade gold, GU, yeah, just let me know before I start. I just want to get a good idea of what everyone likes looking at. Gold, EU, GU. Okay, so the majors, those are the best ones in my opinion. Gold, EU, yeah, those are my favorites. EU, okay. Okay, so most of you guys kind of look at basically what we look at, which is good. Don't be afraid to stray out and find a pair that you like as well. But don't get me wrong, those pairs are great. Cool. So I feel like the best way to go is we'll go over. I'm gonna go over gold first. I've solely been looking at gold only the last little bit, so I will go through gold this week, and then we'll tap into some other stuff as well for sure. Cool. So what do I see on gold right now? So the last this happened months ago. Yeah, in May, we had this big bullish run. Okay, taking out this high, this structural point to the left-hand side. Why is this important? Because this now induces buyers into the market. Any areas like this on the way down, they're going to be traps. Okay, and we're not looking to trade for them, from them. They might provide reactions in the market. So like, look at this area here, provided a reaction, but it only provides us another opportunity to sell into that liquidity. Okay, and then finally we came all the way down to the extreme. This area marked out down here. which is also a liquidity block, and that's why it was respected. Okay, so I basically just I put the box on this last low before this liquidity block down here. Okay, basically what this means is I want price below this low. Once we trade below this low, this whole area can provide reactions. This is on the 4-hour. So when I move over to current price, you'd obviously be wanting to be sitting on watching what price does within it and then trading after it, right? So like I said, this is a whole liquidity block area. There was no liquidity below this low, so that's why it was respected. Overall, what we'll get into it later on in the video, or sorry, in the webinar, but overall, I do want this low taken, but it can definitely provide reactions because it is a liquidity block. Okay, this low took out previous liquidity. So just ask yourself, why would there be any liquidity here if we just took out liquidity? So that's why this area was respected. Okay, and then we went bullish ever since, kind of building liquidity a little bit, banging our heads into this whole area up here. Okay, and then from there, why did we get reactions? Same concept still applies. Okay, liquidity block. So if this is a liquidity block, most likely this can provide reactions, which it did. We had a reaction off this area here, and we sold off to target internal the other way. Okay, simple stuff so far. So we get that reaction here, and where does it hunt for? Internal liquidity. Why was it this low that we ended up hunting for? If you can look on, we'll go on the hourly so we can see a little more clear here. Price, when we printed this low over here, ran all the way up bullish, took out this high, okay, and then respected this whole area here. This is going to be a trap, okay? So buyers are looking into this market because they have BOS here. This is their breaker structure. And then anyway, like these imbalances here, this whole area essentially is going to be used as a POI, their area of interest. So if they take any buys here, where are their stops going? Below this low, okay? And that is why that low ends up being hunted for. See that? Again, buyers looking to get in here. We can even use the buy tool to show you guys. Let's say they take entries over here. Stop loss is going to go below their low. Look what the market does. It runs right for that low. Okay? So, takes out that low. Now, why is that important? Since we've now taken out this low, this is now inducing sellers into the market. Where are they going to be looking to sell from? Areas like this, maybe areas down here, okay? And look what happens up here. We even bang our heads into it, and we get a false reaction to the downside, take out some internal liquidity to the left, and then continuation up to trap sellers. Okay, following along so far? Cool, so look, we get that build up. Here's the build up. Sellers are looking into the market. Again, we'll use a little tool here to make it a little more appealing to the eye. They're looking for sells here. Okay, whatever it is, if they want to see continuations down to new lows, they take sell positions here, and stop losses are going above this high. The market runs for internal and then traps the sellers. Okay, from here, look what the market does. So, and I believe this was end of the week last week, so Monday was over here. So what happens is we run that high, we trap the sellers, and we move sluggishly to the downside. Why is that? If I go into the 15-minute, these are all areas buyers are looking to get in from now. Why? Because we've taken out this previous structural point, okay? So they see this as BOS. They're looking to buy any areas over here, okay? And then we ended up getting a reaction here, moved bullish to the upside, and look what we did. Built liquidity. Okay, we engineered liquidity. Sellers entered here. Okay, so we respected the high and moved away. So now we have liquidity above here, that internal point. Okay, I know maybe in the past, in your previous places you guys have learned from, people just mark out a random high and say this internal liquidity. There has to be a reasoning behind it for it to be actual internal liquidity that's going to be valid, right? Look how, again, price, we get a false reaction down here, pushes up, respects this high that we got marked on, and moves away. Now there's internal liquidity. There's sellers that have been entering the market here. Again, if they enter like this, they're going to have stop losses above that high. Okay. And then obviously we'll move into it, but we ran it and then we had a reaction to the downside. Okay. So again, let's go back to this. We get that false reaction up, engineer liquidity at the highs, and we continue moving to the downside. Look how sluggishly we move here, inducing buyers. Okay. Just what I mean by inducing buyers is they're all entering buy positions in these areas. Okay. Thinking that these imbalances are going to be places they want to buy from. They're going to be tucking their stop losses below the low. So where do we want to see price? Simple stuff, just below the low. And let's just say, hypothetically speaking, it moves bullish from here. There's no trade opportunity for us. Okay. We stay patient. So let's get rid of this. We end up running the low in London on Monday, trapping the buyers. Okay. We get a reaction to the upside. Where's the liquidity now? Right here, right? This is where we marked on that liquidity. So if we get reactions before then, it's only going to be false. So look how the market takes out this high, okay, reacts to this area to the left-hand side, and we get a little pullback. It's just going to be a pullback, though, because where's the liquidity? Right here. And then what do we have right above? Liquidity block. The thing is, this is a liquidity block, so we can anticipate or expect reactions. The thing is, if we take this sell, you're essentially trading with retail now, okay? Because look, we took out this low here. Retail sees that as what? Again, a BOS, right? So we can even mark it down. They're going to think this is a BOS to the downside. And now they want to be selling from where? Here, at the highs. So you want to see that happen. You want to see this reaction occur, okay? Because what this tells me now is when we move away, now we have a reason to push higher into these highs. So we buy into it. So this was my first entry on Monday. Once we got this reaction at the highs, this was at New York Open, ran this internal point, ran these internal highs here, got a false reaction at the highs here, price sells off. We'll go to the 5-minute here, takes out some high here, okay, goes bullish. Look what happens. Oh, pardon me. I'll go through this trade after. Actually, I might even make a case that I gotta take partials on a trade right now. 1 second, guys. Okay. Sorry. We get a reaction from this area here. Why is this send signals? Yeah, you funny guy. Why is this important? They get a reaction off imbalances over here, move to the upside. I marked this high on because why? They think this is now BOS. Okay. They want to be buying where? Again, at the low. Just like this. So these red boxes are essentially just traps. We do not want to be buying with them. Okay. They get a reaction up and then a continuation to the downside. Where do I want to be buying now? Below this low. Okay. Why below this low? Well, that's where we built liquidity at. This whole area essentially here. Anyone entering buy positions? But that was an inducement low that the low was taken. Here? Yeah, it was. Inducement low. And it's just the last liquidity point, right? Because look where we get the reaction from. This is where we build liquidity. So buyers entered the market here. Stop losses here. Okay. And essentially it's the last low before the liquidity block. So all I do is I want price below here. Anywhere below this low is going to be a valid buy for me. Why? Because this is a liquidity block. And like we spoke about earlier in the webinar, if this is a liquidity block, it should get respected. Okay. And that's exactly what happens. We respect this whole area here. So I took a buy position as soon as we stab the low, and my stop loss goes below my liquidity block. Now, there's different ways of entering this, okay? If you're one of the kind of people that wants to have a more precise kind of entry, and that's fine, you could wait for an imbalance to the left-hand side to get filled. So like you have imbalances here. So maybe you want to wait till that gets filled, or you have an imbalance down here and that ends up, or actually, sorry, right here, that ends up getting filled too. So you can wait for those imbalances. I'm not too bothered to have the very bottom or the very top of an entry. As soon as that liquidity is taken, meaning this low, that's where I'm getting in my entry. So you essentially want to be buying at the low above, buying at the low above. Yeah. You want to be buying at the low above the liquidity block, meaning this low here. Because look, again, where did the buildup occur? Buyers are entering here. Okay? This is the low. Look, high, low, or sorry, low, high. And then we come back into this area, this whole POI area. We go bullish, buy trap. We do not buy here. Now we want to see price below. Okay. But that was an inducement low, right? That was taken above that. Can you unmute? Which that was an inducement low, right? That was taken above that. Yeah. Yeah. What like what's the relevance though? What do you mean to my entry here? Yeah, I see it.
So bro, this was an inducement low, and we could have looked for entries, right? It was already New York session, so we could have looked to buy to the top from there as well, right?
Yes, but yeah, that's if you're looking for like a scalper perspective, I want you guys to just focus on the bigger moves right now because technically speaking, yeah, I could have said we have a build up right here. Oops. We have a build up right here. Let me get rid of this. Okay, and then we take it. And that provides a move bullish. Yeah, it's not wrong. The thing is, it's just a short-term move. It's a scalp. Okay, and I don't really want you guys to focus that, especially because this content is so new and fresh to you guys. Don't focus on these small 1 minute moves. We're looking at the bigger picture right now. Essentially, you want to predict the move of the session. Okay, if you're trading a London session, where do you think London's going to be heading for that session? If you're trading New York, where is New York going to be heading for that session? Once you try to get into this intricate ping pong stuff, if you're not advanced, you will get lost in this kind of stuff. Okay, so like
Uh,
it's not wrong. It's just very short-term type moves.
no, but like what I mean is, the move that you got from below, where you got your entry from, it could also happen. It could also have happened from there as well, right? Just come there and then take out the highs as well, right? Because
From
already,
here,
yeah, from here, like not, yeah, once the price has come, where you're saying, like, just a second, this area. So this area, it could have just gone up and taken out that high as well, right?
why is
And
that?
not come
I
to,
mean, the market can do anything
'cause-
it wants, but
yeah, yeah, yeah,
in order for us to take a buy position, we need a price below here.
right, right, right. Okay.
Okay.
Uh, yeah.
And
Okay.
again, the reason why is look where I'm taking my entry off of. I'm taking an entry off a liquidity block area, anticipating that there's going to be reactions here. Again, because why? There's no liquidity below this low right now. So that's why we respect it and move away.
Right, right. There was no liquidity block on the other one. Yeah, right.
Exactly. So partial points, I ended up taking a partial point right here. It was small. It wasn't a big partial point. Reason being was because I was holding to these highs up here. So let me fast forward a bit. And we'll see the trade play out. Okay, so this was, yeah, this was late. So I'm BE at this point, understanding that if price does come back to my entry, it's most likely just going to be invalid. And look where we have maybe run to this low, maybe even spike this low as well. So I'm BE right here. We ended up running this internal high, okay, and coming back. So this trade did not end up playing out to the T, which is fine. That just simply means there wasn't enough liquidity to the upside yet. And that's the name of the game. I'm not always going to be 100% bang on, but we did respect it. So we did have a reason to come up here. It's just price wasn't ready yet, and that's fine. So we'll end up looking what Tuesday does, I believe. Yeah, I think Tuesday ends up showing us what happens here. Yeah, Tuesday. Okay, cool. So this is late Tuesday now. Now, what happens here? So I'm going to get rid of my buy tool. We get spiked out BE, which is fine. With a small partial, it is what it is. But we take out this high. Okay. Same concept still applies here. Let's move this over. Since we took out this high, look where retail was interested in buying from. Okay. One reaction here, one reaction here. And then look what happens. From here, from this low, we go bullish, take out this high. This induces buyers. Okay. They think BOS, this is going to be a trap. Now, where do we want price? We want price below this low, but not only this low. Why do we print this one here? Why do we print this low from the area to the left? this whole red box area. So look how price literally runs this low to the T. Okay, and we've taken out that low and we've gone bullish. If we have liquidity at the highs, any reactions are going to be what? Fake, false. We're not going to be taking any entries here. Well, I mean, it's not wrong because we did run these internal highs here, but it's going to be low probable. Okay, you're trading with retail. And the problem with trading with retail is you're not always going to know, because this could have easily just had a little false reaction like this and gone higher. Okay, you're not always going to know when there's going to be sufficient liquidity to the upside or downside. That's why we just don't take these trades, and we take trades like this or trades like this or like even like this, because we're going to trade into the retail liquidity. Okay, so what ends up happening is we get a false reaction at the highs. Price comes back to the low. Look how we get a false reaction up. Here we get retail thinking this is a BOS again. Okay, false reaction here. And then we run lower. Take out the low that retail was buying from. Oops. This whole imbalance here. Take out that low, and then we move bullish. Okay, and what do we have right underneath? Liquidity block. So is it a coincidence that we ended up running this low, respecting this liquidity block area and moving away? It's because there was no liquidity at this low yet, right? So it respected it and moved away. Technically, it could have came as deep as it wanted. It could came all the way down here and then moved away. Okay. I was not able to get into this entry here. I believe Abbott, and we talked about it in the case study, took an entry on like a confirmation based entry. So we spiked the low. Okay. And now the 1 minute is starting to print. See, we have like some structure coming in. We have low, high, or sorry, low, high, geez, high, low, high. So we got like a break here. Where's retail going to be buying from? Here. Okay. Now you want to see price below that low, because this is where retail is going to be getting trapped at. Now, and he spoke about it in his breakdown. And I think I also spoke about it in the case study, that he took his entry here, but understanding that there's still another low right below. So it doesn't hurt to just open the stop up and just cover all of it. Okay. And what's this? Liquidity block. So tuck your stop below that liquidity block, just like this. And entry would have been here. You could have waited technically for this as well. Unfortunately, you would have not got tagged in. But then Abbott took it here, which is fine. Again, you don't want to get too greedy and just tuck it below this low or below these lows. Obviously, with the benefit of hindsight, it would have worked, but the safer play is put it below the whole low down here. Okay, and target still the same. Remember these highs that we've been engineering liquidity at? We spoke about this in the case study, like I said. Just like this. All right, and we'll move this over. Go into the 15. And boom, highs taken. All right, anybody have any questions about this entry before we move into, I believe actually the next day is, no, this isn't a bank holiday yet. No questions yet? I hope that's good news. Cool. So let's get into, what day is this? Wednesday. Any time rules, I only trade New York. I'm not gonna say I only, 95% of the time. Sometimes there's entries in Asia for me. The only times I ever take Asia trades is if it's more like a higher time frame based entry. M15, H1, something like that. But like I said, 95% of my entries are New York. All right, still confused in putting all together time frame by time frame. Brother, it'll take a bit, okay? But I understand it could be a lot. Maybe watch this webinar over. But I can promise you, the more you study, the more you apply to your charts, it's going to be, it's going to make more and more sense. I can promise you that. But I get it. It could be overwhelming at the beginning. This is all fresh. It's all new to you, right? You got to remember that. So no rules like after 12 p.m. no trades kind of rules, right? Yeah. Oh, that's sorry. I forgot to mention that. New York, I do not take any trades after. My time zone might be different than you guys, but like 11 a.m. to 11:30, in between 11 and 12. That's essentially like London close, EST. Yeah, that's London close. So anywhere after that, it's a no go for me. And then of course you have the exception of FOMC on Wednesdays. Sometimes there's entry later in New York because of FOMC, but that's an exception. So this low here.
No, the good entry you would have wanted to get at 12, like right where it just spiked below. Um, like I just remember when I was learning, it was confusing me why those lows mattered to get spiked before the liquidity block. But it's just so clean on this example, it'd be a good one.
Are you saying this low down here?
Yeah, yeah, and exactly why like that low needed to be ran like from here type thing. And then
Yeah, yeah. So inducement low, and again, this is where the buildup occurs, right? So buyers induced here, move to the upside, BOS. Here's trap, and now you want to see price below. Okay, because why did this low get printed? It printed because of this area to the left-hand side. So this is where we had liquidity. So if you were able to identify this in live time, how could we take it? Right at the low, low below the or stop loss below the liquidity block. And then if you weren't able to find it, you'd want to wait for a confirmation based entry within here, which ends up coming right here, the one Abbott took. Um, sorry guys, 1 second. Okay, cool. Let's move on to price action we get Wednesday. What was Wednesday? Was Wednesday Wednesday wasn't the bank holiday, right? Yeah. Yeah, that was that. This is like a different type of FOMC. This one's like the non-volatile FOMC. The actual FOMC is the one that's at 2, and then there's a conference at 2:30 or whatever. So this one's usually doesn't really do too much to the market, to be honest with you guys. But yeah, no move. Yeah, it's a different. Yeah, that's what I'm saying. It's a different type of FOMC. Yeah, no worries, Nuno. Okay, cool. Wednesday, honestly, nothing special, but it is worth to go over. Look how we're simply just respecting retail, right? We take out the high and respect the low. What does that tell me? We're building liquidity down here. Okay, so there's no trades here for me. If anything, if I wanted to take a trade, I simply would have just waited for price to come below this low. Okay, but we respect it and move away. No trade for me, and I don't care. It's not to my system. That's fine. I don't want to trade with retail because I don't always know if this low is going to get respected or not. Because it could have easily respected it, moved up, and then trapped buyers. Then we take the entry. Okay, you guys understand that? This is a no entry for us. We want to see price below the low. And then we end up just moving up to the upside. Very, very ugly day. Nothing to trade really. Okay. And then honestly, I'm gonna skip right through Thursday because as we know, that was bank holiday. Please, guys, I mentioned this in the Discord. Don't even bother trading London on bank holidays. I promise you, it's not worth it. Just take the day off and hop on the next day. Bank holidays are a no trading day. Use it to study, use it to backtest, whatever it is. There's no reason to trade bank holiday days. Could have honestly just skip right to live. What am I doing? Okay, cool. So go to 5 here. So the thing we were just literally just talking about with this example here on gold, there was no trade here. Look what gold does here. Right before news, right before NFP, we trade above this structural high here. Now, in order for us to take a trade, where do we want price to trade below? Boom. Below that low. And look what we have right below this low. Once this low gets taken out, now we now know liquidity is taken. And look what we have right below. I'll go on to the 15. It even looks a little more. This candle here spiked the lows to the left, right? And then moved higher, left an inducement low. Okay, so if I draw it like this, you could use the whole candle. But you can see how we respect that whole candle here. And then if I want to refine it a bit, I grab, I believe, yeah, I showed you guys at the beginning with that gold example. If I grab the last low before the liquidity block, I want price anywhere below this last low because this is a liquidity block. So we can expect price to come anywhere into this blue box and move away. And if I drag this all the way to the right, look. See that? Spikes that last low. Okay. Again, runs that liquidity right here. Spikes that last low, comes into this liquidity block area. Now I can take the time and go to the replay. And try and find you guys in imbalance and stuff like that. Like I said, it's not something I do because you're just over refining. Even in this example here, it doesn't show the imbalance on the M1. I can already tell just because this candle here, this one M1 candle, there's going to be like a 30-second imbalance in here, but it's just not unnecessary. All we want price is below this low here, which we marked on with the blue box again. You grab that last low, drag it over. We want price in this blue box. Anywhere within the blue box can provide a reaction and then move away. Okay, and that's exactly what happens here. Price spikes all the way down, clears all of this liquidity that we built pre-NFP. All of that. Okay, traps here, mitigation in this liquidity block here, and just spikes up. I seen the tap in NFP and I was like, goddamn, yeah, honestly, it was crazy. Now, I'm going to be honest with you guys, like, I don't want to be unrealistic. Taking this in live time on NFP spike is not the easiest thing to do, especially because it's so fast. So it's nice to look at after just to show you guys the accuracy of this system and model, but I don't want to be unrealistic. This is a very, very hard entry to take, especially live in NFP, okay? Because this happened literally on a spike, and within, I think, when I was watching it live, within like 10 seconds, it spiked like all the way back up to here, like 100 pips back up to the upside. So is this something that we can take in live time? Most likely not, unless maybe you took an entry below here and had like a bigger stop. But even that, like, it's just not that realistic. But it's just nice to see for sure. Okay. And where does price end up hunting for? We had this high to the left. And then we had this guy as well, right? And like the same concept applies. Why did this high print? Printed because of this whole area here. Okay, so that's why that ends up getting hunted for. Everybody understand? So, where can we see price now? Look how we've taken out this low here. Structurally speaking, low, high, low. And now what did we just do? We just took out this structural point. So now retail sees that as BOS to the upside, right? Where are they going to be wanting to buy? Buyers induced, exactly. They're going to be wanting to buy all these areas. Buy. We understand there's liquidity here now. So is it possible for us to see a big sell-off occur? Yes, it definitely is. But I need price to align, right? We just had a massive move today in NFP. I'm not just going to show up Monday and start adding short positions. Let price develop, right? Maybe we get something like this. Move and then run this. What does that mean? We induce sellers, okay? So maybe we get false reaction up here, move down, take them out, okay? Maybe now the sell can start happening, okay? So let that price action communicate to you that this higher time frame move can occur, okay? Don't just, like I said, show up Monday and just start unloading shorts if you trade gold. Please just let price build more data, and then you'll be able to build a more confident basis on an intraday perspective, and then align it with your higher time frame. The build up you talk so much. What? The build up you talk so much, question mark? Yeah, Elijah, we'll get to. I'm gonna get to euro right now. Give me 1 sec. That's it. I mentioned in the Discord with you. It's literally the first step to any trade. Yeah, of course. You want to see a buildup of liquidity, right? Because that means a trap is occurring. Sellers are being induced, buyers being induced, right? Classic, something just like this, right? We take this low. We want to see this buildup occur. We're not going to trade that, right? And then maybe we have liquidity down here. We want to see price run that liquidity, and then we trade into. Okay. But yeah, always talk about build up. It's very important for sure. Yes, exactly. But Ryan, you have to obviously align that with liquidity and everything. The inducement model is essentially just for us to just like title specific highs and lows in the market. Okay. We must be the last participants in the market. Ideally, yes. Of course, because that means you're getting in when the trap is occurring, right? When sellers are getting trapped or buyers are getting trapped, liquidity is getting taken. When liquidity is getting taken, that's when we are obviously entering the market. Okay. Anybody have any questions on gold? That's why most of the moves are quick. Yeah, when you're in, most of the time, when you're in the correct move, you'll know quite quickly. Right, buildup occurs when price respects. A buildup is just when we see liquidity build up in the market, right? So there's a bunch of different examples in the WAP. It could be anything like this. We respected this high, moved away. There's a buildup, right? A buildup of liquidity here. Sometimes you'll see like a channel where price will respect like order flow retail for a while, and you have all this liquidity. And then maybe you get a run to the downside like this. This is most likely to give me a buy back up. Okay, this is a buildup of liquidity. Right, and then this will be a trap. Just Stephanie, if you haven't watched, look at the liquidity tracking videos. I don't know if you've watched it yet. Check those out. All right. I'm gonna move over to euro. Like I said, I haven't been really looking at euro too much, but let's cover what's been going on. All right. This is US 30. This is euro. Cool. Let's see what it looks like on the higher time frames here. Okay, so I remember looking at this back in this is end of last year. Check this out. So Ryan, don't overcomplicate things. When I just switch the time frames, it's literally just me. If I can't see what's happening on a specific time frame, if it's too squeezed up, I go down a time frame and just open up price, right? So this is another thing I'll just touch on quick is everybody says, what time frame is this one for? What time frame is this one for? Anybody that's told you in the past, like this is for this is for that, is completely wrong. Okay? Whatever the time frame, the current time frame tells you like the clearly of all the price action in front of you, that's the one you're gonna use. So like are you gonna stay on the 4 hour here and try to trade this? No, it's all squeezed up. So like we can't trade that. So just go into a lower time frame and it's gonna be able to explain to you a better story. That's it. Sometimes I'm on the 5 minute for all of New York because the 5 minute is telling me what's going on. Why are you anticipating the euro to go bullish on the weekly? Yeah, we'll get into that, brother. Let me just go over what's going on here. Okay, how about this? We'll go over some euro price action here on Monday, and then we'll move into Tuesday, Elijah, and hopefully that answers some of your questions, okay? Cool. So let me just we'll mark up the higher time frame, see what's going on here. Last week took out this internal high here. Look how price respects the low, okay? Induces buyers, runs to the highs, and then traps them. Why did this low print? This low printed because of this low to the left. So we took that out. Okay. Buyers get trapped. Okay. And sellers induced. Look how we get reactions here for sellers. And the reactions are just going to be false. Okay. It's just going to be a pullback and maybe a buy opportunity if it aligns with the system. So this was end of last week. We ended up moving bullish to the upside on Monday, the start of this week, taking out these highs. Okay. And now let's mark on what's going on here. So we take out the high. Okay. And then we immediately come down, take out this internal low here. We also take this one and this one. So we'll just mark out this one. Come back to the highs and respect retail. Okay. We respect this high and move away. Now we have liquidity above this high. Okay. And we sell off to the downside, again, taking out previous low. And then taking out some internal lows to the left-hand side as well. And then news, I believe this was Monday, we get a spike up and respect retail again. So now look at all the liquidity we got back at the highs now. Not only does that respect these highs, but we've taken out these. So this induces buyers. We do not want to buy above this low. Okay. And why did this low print? Look to the left. Mark this out. Okay. Here's where the liquidity is taken. Everybody understand? We take this low. Okay. And then move away. Let's go to, as for entries on Monday, I believe, yeah, there was nothing, because if I wanted to take this sell, I would have wanted to see price above this high here. So let's just say, hypothetically speaking, price wicked above here. This could have been a sell. And where do you target? Here. Right? So let's just say we were in live price action. Let me just rewind like this. You could have realistically had an entry waiting right here. Again, this is news, so you don't want to be doing this right before news. But just for example purposes, I would have taken an entry above this high. Okay. And then this is such a small stop. So just open it up a little bit at least. And we're targeting just the liquidity to the left-hand side right here. Okay. Unfortunately, news comes in and just respects retail, spikes back down, and just sells off to the downside. It's no entry for us. Okay. So yeah, that was Monday. No entries per the system on Monday. And Elijah, let me know what on Tuesday what you ended up doing. Okay, so grab that liquidity to the upside, move back up. Any reactions are going to be false. Where's New York? New York ends up coming over here. Is it okay if I'm finished? Yeah, let me just cover Tuesday real quick. So we end up respecting this area to the left-hand side. This was also a liquidity block, right? So that's why it was temporarily respected. It didn't really come fully into it. Just kind of tapped into this imbalance. Moved bullish, respected retail, moved away. Okay. And what did we do when we moved away? Look at the shit ton of liquidity we built to the upside. Why is this important? This is now providing us a reason to move to the upside. We have liquidity here and these internal points up here. As for taking any entries, we end up respecting this liquidity block here, which I like too much. I would have wanted to see if we had a low like this. Okay, and it'll make more sense in a second. If this low respected something over here to the left, moved away, I would have liked to see price below. Okay, and then what do we have right below that is a liquidity block. So I would have taken an entry like that. But that wasn't really the case here, so it wasn't super clean. I would have probably not taken an entry at this liquidity block. Okay, because essentially all we did was trade within this massive imbalance here and here. And then coming into the extreme and moving away. Okay, so I'm not taking an entry here. I would have wanted to see something like this occur. Because here's a buildup. And then structurally speaking, look how we get high, low, high. So now we're starting to build liquidity here. And look how we even get a false reaction at this area. Okay, that's why I would have wanted to see price below some sort of low to the left, but it just traded within this whole 15-minute candle here, that massive imbalance. Okay, I don't really like the entry too much here. I do like, however, go to the 5. And here's an example, Ryan. 15-minute is getting squeezed up. I just go down to the 5, and the 5 makes more sense to me. That's it. Okay, when price is too squeezed up on a time frame, just go down 1. That's it. Cool. So look what happens here. High, low, high, low, and we move away to the upside. We leave liquidity. Okay, look at this buildup we had here. Retail are buying here. Stops tucked below here. Okay, I grab that low, drag it over. You've trapped them now. Now, in order for me to take an extreme entry, I would have needed to see a liquidity block to the left-hand side. So if there was some sort of price action like this, I could take the entry when the liquidity's taken. So when this low's taken, and my stop would go below the liquidity block. But there's no liquidity block in this price action. I'm just trying to show you an example of how I could take an extreme entry. I would have needed a liquidity block to the left-hand side. Does this make sense to you guys? Because this is important. When I take extreme entries, when liquidity is taken, I'm taking it off a liquidity block to the left-hand side. Okay? And again, what's the whole concept behind that is there's no liquidity here. So once price respects it, it should move away. All right? And, okay, so yeah, this is not an entry. Like I said, there was no liquidity block to the left, so I wouldn't have taken anything just from the extreme. As for ooh, this is a tough one. Oh, I don't know if I would have taken this. Okay, so we grab that liquidity here. We print that low. We move higher. We get high, low, and we move away. So there's now liquidity below this low. And look, we actually don't take it and then still move away. So I'm not taking an entry here, most likely. I would have wanted to see price below here because where is the buyer liquidity? If buyers are entering the market right here, they're going to have stop losses tucked below my black line here. So I wouldn't have been able to take this. Okay. Yeah, so there's no entries on Tuesday as well. Who was Elijah?
What's up, man?
What's up, brother?
So there was actually an entry around 6:30 to 7, if you look. Scroll a little bit. So that's one of the long positions I took. But
nice.
the problem I had was I was thinking it was just going to be a short-term trade to take out that buildup. I was thinking this liquidity block was going to be just for false reactions and to end up getting ran later. If you go to the 1 hour, I
Yeah,
had that.
that's fine. So you targeted this up here, right?
Yeah, I targeted that. But after that, I was expecting price to come down after that.
Okay, and if you did need price to come back down after that, where would you have sold from, right? Did you were you looking for sells up here?
No, I wasn't looking
Over
for
here.
sales up there just because sellers were induced right there. I was waiting for price to come a little bit higher. Once it retested the other liquidity block, if you zoom out more.
This area?
But yeah, that area. Only thing though, it was kind of a risky position just because it was like a news wick. But
Mhm.
my bias was I had the liquidity block low as the inducement low. It looks clear on the 1 hour or 4 hour.
Check out the one.
So yeah, I had that low as my inducement low.
So when we took out this low, what happens here? We take this point out. This, we can anticipate this to be what? All these imbalances, any reactions from here, we can anticipate to be what?
Traps.
Yes, exactly. And don't forget, look at the liquidity we left up here. Sellers entered here and here. There's going to be liquidity above this high. Okay.
Yes.
So any reactions before it, don't get me wrong, they can occur. Like, can this occur? We can run up here, get a reaction, and take out these lows. Sure, it can occur, but it's just going to provide another buy opportunity for us.
That is true. That is true. That
All
is
right.
true. So in
So yeah, this buy. Yeah, no, go ahead. Sorry.
some instances I kind of have like some analysis errors just because I'll have my inducement lows marked out lower than the internal liquidity would be taken. So it's happened to me on gold this week as well. So price will come a little bit not lower, but it'll take internal liquidity then run. And I would be like, okay, that's the inducement low because you and Abbott would take those trades from those areas. So I'm just thinking that maybe I'm marking it out a little bit lower than it needs to be because price needs to generate liquidity before coming down there.
Can you give me? Is there a specific example on this chart right now?
So I would say this right here is the most valid example that I could give you, really, just because I would be wanting to buy below this liquidity block. That's where I would want to buy.
Can you annotate? So you can.
How do you annotate here?
If you click more,
More.
it should give you an annotate option.
Shit. Where is that? Oh my God. Sorry.
I think he's talking about this inducement low. He wants to buy below this low.
Yeah, yeah, I would buy below there. I would buy
You
below
wanted to
there.
buy below here.
Yeah, yeah, I saw that as the inducement low, just because I had it marked out from the higher time frame.
Yeah,
But
yeah.
I
So
understand now that you would need a build up before then.
mhm. And which is fine. Yeah, like I said, that's why I wasn't taking any blind entries down here. I showed you guys that example right here in order for me to take this kind of entry. The confirmation here worked, and it was nice. Honestly, if I took this buy entry as well, I probably would have been targeting these highs just like you.
Hmm.
It's a great target. I mean, and you're still getting 30 pips out of that. And then you just want to analyze and see what price action does after that. So you can see before we took that high, we had that buildup occur. This is a buildup. So we get run that
Yes.
high and price hunts for that buildup. And what that also does is now that this low is taken, it induces sellers. So that's why we get the false reaction right here. So just take it step by step. Don't try and predict too far. Let literally price just reconfirm with your bias what's going on. So in this example here, we took the low. Okay, so now you can look for buy entries here. And then again, anticipate, since this is a liquidity block, that if we do get reactions here, it's just going to be false.
Gotcha, gotcha. Yeah, most of my mistakes usually come from predicting too much, honestly.
Which is fine. I mean, you need liquidity in the market in order to build a bias, right?
Mm-hmm.
Cool. Okay.
Yeah, man, I appreciate it. Thank you, bro.
No worries, man. We'll hop over to Wednesday here. Was Wednesday the holiday? No, that was Thursday. Big move. Okay, so I'll drag this all the way over. This whole area is going to be traps, right? So we're not looking to trade anywhere within this red box. Retail is, and look how we get. I'll even move it up a little bit more. So we get a reaction off it. Stretch this price a bit. Was this in? This is in Asia. So I believe no one's trading at this time, but you can see what happens. Highs taken out, and then we get that false sell off to the downside, clearing out internal liquidity here. All right, and then we get a buildup. What I mean by buildup here is this low is printed. Y, look to the left-hand side. We run up, take out this high here. So if I go on the 5, it's probably another high. Yeah, there you go. So we take out these highs here. Retail sees BOS, market structure shift, whatever they call it. They're buying from this area right here. Okay, now we want to see price below. Okay, and to be honest with you, what do we got right here? Liquidity block. So can I buy as soon as the liquidity is taken here? The liquidity block is a little far away, so let's look and see. 6 pips, it's not bad. That would be the entry. Again, if you want to wait for a more intricate entry, you have imbalances down here. Let's go on the 15-minute because there's just so many 5-minute imbalances. Let's see if the 15 gives us something a little more cleaner. Here's your candle. So we end up tapping into that. So essentially, you could wait for price to come into this imbalance here, which is fine, because as soon as we tap into this imbalance, it can go as well, right? So a couple different options. Here's the low, the liquidity. Again, you can take the entry like that, like I personally do, or you have the possibility of waiting for. Let me make this blue so it's a little more. These will all be different types of ways of entering, right? So here's your first entry. You can take as soon as the liquidity's gone. Here's another one when the imbalance is tapped into, or you have the greedier one when the entry candle's tapped. It's starting to make a little more sense. Perfect, man. That's what I like to hear. I'm telling you guys, the more and more you just continuously reapply and study these things, it just becomes more like it's easier to understand. So like I get it at the beginning. There's a lot to consume, and it's gonna be a little confusing at the beginning for sure, but that's normal. It's just normal. It's normal with anything in life, to be honest. Don't rush it. It'll slowly come to you. But yeah, here's the three different types of entries. Again, when the liquidity is taken, the one I take, here's when the imbalance is tapped into, and of course the entry candle, which ends up working with the benefit of hindsight, but I don't wait for this one, to be honest with you, the entry candle. If the RR makes sense, I'll just use when the liquidity is taken like this, okay? And again, the stop will go below my liquidity block. Why did price? I was waiting to remove those lows below. Yeah, we just spoke about how this area is the liquidity block. So we took out this low here, right? Here's the liquidity block. So if it was gonna end up taking this out, this should provide reactions nonetheless, right? And maybe it could run for this high, and then if it wanted to come lower, it could take out this high and then just go lower. So at the very least, this should provide a reaction for you. Okay, again, there's no liquidity below this low right now because it was a liquidity block. So that's why this was respected and we moved away. Okay. Again, this was in Asia, so let's be realistic. Not or was it? Yeah, it was still. Quick question: is it regarding this price action? Okay, yeah. What's up?
So if there was no buildup in Asia, and we just just came down, then we could have looked for a low, the low below that, because we had a buildup over there, and we also had a liquidity block. That's why.
Yes, that's the importance of the build-up.
Yeah, okay. That's what I want.
This is where people are trying to buy from.
Yeah.
Right.
Yeah, but if you didn't have that build up and price straight just came down to the liquidity block, and then it built up from there, and then in London it came down a bit more, and then we could have looked for long from the inducement down there. Yeah,
for sure.
Yeah.
All right.
Okay.
Yeah. Okay, cool. So Thursday again, bank holiday, so don't do that to yourself. Don't do your head in and try and trade bank holidays, please. Friday NFP, we can just cancel and go back to live time. So I put the little forecast out, and I was just kind of just predict what price could do. I ended up looking back and I saw it didn't happen. I saw maybe we could come down and take out this low, which we didn't do, which is fine. What ended up occurring, I mean, God, this price action looks just hideous. Lord, do I have to break this down? I can't, honestly, I'm not going to break that down because that is untradeable. But as for where we can head to next, like we were speaking about on the forecast, I got my eyes on here. Okay. What can happen before, don't get me wrong, is we can get false reactions at this high. Maybe we go bearish early week, take out this low, and that would be a buy. Okay. And that's if it provides us that false reaction. If not, like, there's most likely going to be no trades until this is taken out. Okay. But like I said, if that does happen, do not be looking for sells here. Look for buys down here. US 30 over EU lady. Honestly, I haven't been looking at EU too much lately, and thankfully it's been quite ugly recently. There's been some good trades here and there, don't get me wrong, but it's not like it's not too pretty, to be honest with you guys. Okay. I did take a trade on US 30 today. Can anybody see it? Maybe we'll do a little trivia first. I'll mark out my target. Can anyone see my entry? And my entry was taken. So this is the power of literally whatever the time frame tells me I'm going to be using. So I took my entry essentially off this time frame, off the H1. Perfect. Yep. Thanks, Abid. Wasn't asking the other mentor, but we'll let that one slide. But we get a false reaction at the high, right? We take it out. And then we get that sell off to the lows and trap anybody looking to buy above. And what do we have right below? Liquidity block. So if you want to go onto the 15, you can see the start of the imbalances right here. Okay. Just like the other examples, we're not going to take the entry as soon as the liquidity is taken because look how big the friggin' stop loss would have to be. So in this example, you'd have to wait for it to be a little more precise, a little more intricate. So again, you have the 15-minute imbalance here. You went to the 5, and that's where I use mine. So there's the 5. And then if you look on the 1 hour, it's essentially that whole candle on the 1 hour here. Okay. And entry taken here. Stop here. Target here. And I just took partials. Again, I heard you guys probably saw when we took this high out. Okay. But I'm gonna make an in-depth case study on this trade. So don't worry if this was a little too fast for you. Okay. But yeah. And then something we'll go over really quickly is if you go on the daily. Look at this. We left all these equals up here. We get that false reaction to the downside. Price takes out previous daily low. Now let's see price back up to these equals we left. Okay. Cool. Wow, that flew by. What was that? Just an hour and 10 minutes? Not bad. I just want to leave you guys a few minutes if you have any questions about charts or even just about me and Abid. I know this is our first webinar, so if you guys have any questions for us, let me know. And of course, I recorded this. I'll get it uploaded on the WAP ASAP. So over the weekend, maybe you guys can watch this once or twice more, especially the newer guys. It's good to hear, man. I wish you had a little bit more confidence in me, but no, I'm playing, but it's fine. I understand. It's frustrating. It's confusing in the beginning with anything, but I'm happy to hear that it helped. What happened, SLT? This name, InterEquity, was a name me and Abid came up with last year sometime. I don't know how we came up with the name, but this is me and Abid. We came really close. And we were just like, yeah, we wanted to do something, work together in the future. And yeah, we came up with this name. So we rebranded to InterEquity. Why doesn't Abid speak? Abid will do some webinars in the future. He's just sitting in on the call, brother. He's gone mute. He's gone mute on us. Abid, you want to say hello?
What's good, guys?
This guy's mute. Doesn't speak. Yeah, it goes against everything you've learned as a trader, so just programming. Yeah, of course. It's going to take some time, man. Everyone, if you want to trade indices like usual and other charts don't show the top of the... Yeah, I mean, it's good to know. I don't... I've always used Oanda for indices. I definitely recommend the Oanda feed, especially for indices. To be honest with you, Oanda is the only one I'm using right now because gold is Oanda as well. But yeah, he seems shy. No, he's good, bro. He's just laughing because he's like, why doesn't Abid speak? How did you guys end up trading the same strategy? Well, actually, Abid was the first guy I ever taught my system to. Literally the first guy. And now this guy is an absolute maniac. So it just goes to show you what's possible. But yeah, he's the first guy I taught. We became really close. And then he even like helped me refine and create the system to be even better, easier to understand, all that stuff, right? Yeah, a little bit confused when to use external, internal, when to use code, or it'll be induced. It'll come. Just keep studying. I mean, I don't have a golden key to just tell you this and that. Keep studying and keep applying. And like I said, even with the other guys right now, it'll become more and more clear to you. But yeah, the case studies are definitely a good way of seeing everything put together. Everything put together in the video, and you see how we actually take the trades. All right. Anybody else got any more questions? Let me know. Yeah, the webinars are gonna be every week for sure. Love the webinar. Good to hear. There's gonna be lots and lots of stuff going forward, guys. I promise. It's gonna be a lot of good times. Keep studying, working, do your thing. There's a lot of people that are absolutely smashing it now. From learning mine in my in Avid's content. So just keep doing your thing. One thing I will say is this strategy is not the end all and be all. It's not the golden key to everything. It's very, very powerful. At the end of the day, psychology is very important too. So please make sure you're always following your plan. Make sure you're following your rules, whether that's going to be 2 trades per day, 3 trades per day is kind of pushing it, but make sure you set those limits for yourself. Everybody's different. So I'm not just going to tell you guys my rules because it might not work for you. Find what works for you. If that's going to be a trade limit, if that's going to be a risk limit, specific sessions, have all these outlined for yourself and continuously practice it on a daily basis. Okay. Don't fall off it. Don't be lenient on some rules, because if you're lenient on one rule, you'll be lenient on others. Okay. If your psychology is not in check, it doesn't matter how good your charting is, you will not become profitable. I promise you that. The YouTube backtesting was fire. Was also doing fine, to be honest. Was very, very interested to know how you do it. Like, are you saying the platform? The platform is FX Replay. I don't really use it too much. Last couple of, like, the videos we made, we would just record them for fun and then upload it to YouTube. But yeah, I believe the platform is called FX Replay. I'll just mention, yeah. That video is fire. Yeah, no, we have some cool content coming forward on the YouTube, and even for you guys on WAP. There's gonna be lots of stuff coming forward. I believe I'm gonna be able to bring on some guest speakers for some future webinars as well. So yeah, we got lots of stuff planned, and yeah, it's gonna be a good time. Cool. So that wraps up this webinar, guys. I hope you guys enjoyed. Like I said, it will be it will be uploaded on WAP ASAP. I'll let you guys know in the Discord. And yeah, hope you guys have a good weekend, and we'll see you back here on Monday. Alrighty. Thank you, Mark. Of course, brother. We'll talk soon. Take it easy, guys.